Good afternoon, everybody. This is Markets for Millennials, and I just want to thank you for joining. Don't forget to hit the like button, subscribe, share this video. And this is the weekly market wrap for the week of May 3rd through May 7th. And this, what I'm going to do today, normally I don't include the 50-day moving average in my technical analysis and in my market recaps, or usually in any of the videos that I do. But I'm including it today just for context, and also to just show how decisively a lot of things have moved over the last week, and how some of these moves are continuations of things that have happened over the last couple of weeks and maybe even the last few months, and also some things that have changed a little bit. And we're going to start here on the DXY dollar index. The euro was really strong today and also yesterday, and so that is part of the reason why you see the DXY so decisively down. It's helpful to remember that the DXY is about 50% of it is weighted towards the euro US dollar pair. So keep that in mind. But it is down decisively. Previously I had put in this yellow line right here, and that was sort of a kind of a near local resistance and support. You can kind of see, following my mouse, a couple of times we popped above and below, closed above and below, but it tended to be pretty good. We fell below that level. I had that level marked. One of the things that you could see over the last maybe the last few months, because the DXY ever since December has basically been sideways. Obviously we've gone lower, we've gone higher, but we're really close to the level that we closed at on December 3rd. The last time we closed around this level was almost around mid to late December. So we've been sideways, but the dollar did a counter trend move and actually came above and closed above the 50-day moving average, followed along it, came below, but then came decisively right back above. And it looked like, at the time, the DXY was on the move upward in a counter trend move. And a lot of people went dollar bull at this time. Obviously, a lot of the dollar bulls have been dollar bulls even across all of this, but suffice to say, people began to get really bullish on the dollar. But then we came right back down. March 31st was when we started making that turnaround. And for the month of April, it was basically entirely down. I mean, just decisively down. And so obviously we had a little bit of a bounce around the time of the Fed meeting. And then we've come back down decisively ever since. I think the only thing that we have to be concerned about potentially on the DXY, obviously zooming out to the 3-day chart, we have this green line, which is a good support level. Getting below that, as well as this long-term trend line, which comes from, which was a cloned trend line, which you see was support and resistance all along here. We broke below it back in December. So I cloned that. That's going to provide another level below for us to look at. So that'll be something to help us keep apprised of what's going on with the DXY. So I'll be looking at that. If you're trading FOREX, it looks like going euro US dollar long seems like a good idea, but I don't know that I would be fully committed until we definitely close firmly underneath this rising trend line and under this support, turning it into resistance. But it's been a good trade all year, and I anticipate that that's going to continue as the U.S. continues to do QE and we continue to pass stimulus bills and things like that. So you see we are decisively below the 50-day moving average now, and I will look. I think that that's going to continue. Yields, we've had now a couple of closes in a row. We're going to close in a few hours today, but we've had a couple of days in a row closing below the 50-day moving average, and the last time that was the case was back before yields turned positive. and so it's it's been a long journey since then, but yields have now decisively broken down below the 50-day moving average. Tried to come back up a little bit today, had a really big sell down, but it's just a wick, as you can see. We could not stay down below the 1.50 level. That's going to be the next level I'm watching. So I'm seeing over the next few days where I would bet that we're going to bounce down to this level and we're going to test it again. I could see a situation where we bounce in between these levels. Once again, you have this overhead resistance, which has been pretty firm at 167. You have the long-term descending trend line, which I showed a while back. If we go to a weekly chart, you can see really well how this has provided resistance. So it's a really important trend line. I anticipate that it'll continue to be important. You can see I had the bottom of what I had as a bull flag here, and now it's looking like the top of that old bull flag is now the bottom of this descending wedge. So could be a bullish pattern considering our uptrend since August, but because of the close below the 50-day, it's going to have to convince me really well before I start to think that yields are going to move up. It's entirely possible, but in the near term, if we're talking about over the next week, I think we're going to stick around in between here, like I already said. So what does that mean now? Let's go to the equity markets. We have the equity markets up. Today and yesterday were really big up days on the S&P. I'm looking for here on the S&P, if I'm going to go on either in futures or through SPY, if I'm looking to take a position on this. Again, it depends on if you're trading futures or if you're trading equities, like if you're trading individual stocks, things like that. I'm looking for this to come down and retest again before I take that trade. But right now, just with the macro backdrop, it just seems that equities are just going to continue to pump. You could see, I think, something that I think is interesting about the 50-day. We are getting really extended above the 50-day moving average. And a lot of times when that happened on the daily chart, you can see if I scroll back here, when we got really extended away from the 50-day moving average, we had sell downs until we touched and bounced off of them. So that's something to watch out for. That's why I do believe that it's worth the wait to wait for a test of the support here at this level. It's also possible, because you can see there's some local support right around here, it's also possible that over the next few days this moving average will come up a little bit more sharply, and then we could get a sell down and meet it at that level. So either of those would be entries that are just fine. So actually I'm going to put this back here just to see over the next week what happens. The Dow, meanwhile, this was off like a rocket. We consolidated, we hit this level. I added this line as resistance. We consolidated under it and just shot out of it. And the Dow just continues its uptrend. Obviously, there's been a lot of talk about sector rotation to industrials and a lot of stocks, a lot of equities that are in the Dow 30. It's helpful to remember that those are just 30 stocks, so it's not necessarily representative of the whole market, but also very extended over the 50-day moving average. But so again, just like with the S&P, I'm not looking to chase this momentum, especially now that it's the weekend and the markets are closed. I am going to, if I'm looking to get long, I'm waiting to get a retest of that trend line before I get in. Or at least some semblance of establishing some support up here before I look to go long, either in the futures or on the Dow ETFs and things like that. Now, the NASDAQ is a little bit of a different story. We have not been making a higher high. We made a higher high April 29th, but we did not close at that high. The last all-time high that we closed at was back here on April 16th. We've been on a downtrend. Back on the 3rd of May, I put this descending trend line from the 8-hour chart, and you can see here that we have not yet made a higher high here. So I'll be looking over the next week to see what happens with the NASDAQ. This area of support or of resistance I feel like is fairly strong. I might think about lowering it or maybe raising it, maybe somewhere around here or up here. It doesn't really matter. I was using the 8-hour time frame for that level, and so I've just been making small adjustments here and there. But looking at the daily chart, we got to get above it and confirm it as support for at least a few days before I'm looking to get long there. The NASDAQ to me, out of all of them, just seems a little too iffy. I know that over here, I said when the NASDAQ got above and had been testing this level, I said that was a good place to get in. Obviously, that proved to be wrong. If you're swing trading, it looks like it was wrong. If you're buying and holding like the ETF for the NASDAQ, then I'm sure it's fine over time if you're holding long term. But on a swing trade, obviously this was a bad call. So I'm waiting for the NASDAQ to get above here and actually confirm this before resuming off, before I'm looking to get involved there. But I think it's interesting. A lot of people are talking about it being about sector rotation. That's why you have the NASDAQ down and not making new all-time highs in comparison to the S&P and the Dow. But then there's the Russell. And the Russell, as you can see, I've got this ascending trend line, which was cloned. Let me pull back a little bit. I have a bunch of cloned trend lines that were testing different levels of resistance and support, a lot of touches. The Russell also is not making an all-time high. We haven't made an all-time high since March 15th, the Ides of March. We had a really good update today on the Russell, up over 1%. But it looks like on the futures, we're closing right around this ascending trend line. We are, just like with the NASDAQ, I don't know if I said anything about the 50-day. We are pretty well above the 50-day on the NASDAQ. On the Russell, we are also above the 50-day, so still bullish. But to me, equities are a little bit more risky. There's not, like on the S&P and on the Dow, there's not really a good place to enter right now. I'm waiting for those retests, as I said. The NASDAQ and the Russell, slightly concerning to me, still bullish, but kind of concerning to me because they're not really, to me, they're not impressive. So I'm looking for the Russell. You can kind of see here, we've kind of been chopping sideways. Long consolidation, to me, that means that we're either going to see a really big move up soon or a really big move down soon. So I'll be watching for that. I think just given the economic backdrop, what I expect to happen is I think we're going to consolidate underneath this resistance, pop above, retest either this ascending trend line or the resistance flipped into support and then resume off. So that could take a few days, or it could take a few weeks to unfold. Obviously, we've been in consolidation in this region ever since, back in, where are we? Ever since back in early February, so it's been a few months. And I don't see why it couldn't continue to chop sideways at this point. But the real story these days have been gold and silver. So we'll start with gold. And once again, I've got my 50-day. To provide some background and some context, I've been talking for a long time about this, what I've been calling a long-term cup and handle pattern. And so I'm showing you the cup. Obviously, you've got the cup right here. And then we were working on the handle. And so I had, to zoom in again, I had this green box right here. And I was suggesting that was the buy zone. That's the sweet spot. Although I had, like on Twitter and whatnot, I had been saying that we should, if you're into gold, you should be starting to accumulate, especially once we were below this level at, what is this, around 1829, around 1800. Once it got below that, which was right over here in this region, that was the best place to start accumulating if you hadn't already been. I did expect originally that we were going to come into this green box, but obviously that hasn't happened. We have seen a corresponding, that drop in yields that I was talking about. which has given gold its legs for this run. We seem to be decisively up. We are decisively above the 50-day moving average. If I go back to the daily chart, you can see that here. We've gotten multiple closes, over 2 weeks worth of closes above the 50-day moving average. So gold is on its way up. This is the resumption out of the handle from the cup and handle pattern. So it's happening earlier than I expected, earlier than I actually wanted, but it's happening. So that is good news for anybody holding gold right now. So it looks like the low was right here at 1675, right at the top of my buy zone. So also what you can see here is I have basically 2 more trend lines. I'm going to darken this one for you guys so you can see it. I basically have 2 more descending trend lines for this to get past, and you can see that even right now it's not entirely certain where gold is going to close. Right now we're at a confluence of resistance at 1829, 1830, and also this descending trend line, which goes back to the top back in August of 2020. So these are the 2 descending trend lines that we need to get past. I also had cloned and darkened this trend line ascending, which had support and resistance at various points, we kind of got up close to that. There's a confluence there, a lot of confluences of trend lines and resistance up here. So as long as yields continue to either stay where they're at or decline, I anticipate that gold will continue to rise, and it just can't stay down for too long. So whether it's another couple of days, couple weeks, whatever, gold's on the way up. We've got this ascending trend line right here, which as long as it stays above this, it's going to continue just to go up, 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 up. So what I'm going to look for is to get above and confirm this resistance, which it was above it earlier, but it's kind of resting around that level. And then if I pull back and look at all of my resistance and support, we've got this level at 1918 or so, which I'll be looking at. And I think, to be honest with you, given these descending trend lines, given the support and resistance that this level at 1916, 1918 has been, I think once we get there, it's off to the races. And I think it'll be just a short time before we get to all-time highs. So, but we have to get there first. So I'm looking to retest, to confirm and retest above this and resume off, and then get underneath this trend line and either consolidate or break through and retest, or consolidate under and break through. So I think, just given the time frame it's taken, I think gold is a slower moving asset. So I think we're looking at a few weeks before this really plays out and gets above here. Obviously, if yields kick back up, we'll see gold take another nosedive down, and it's possible we could get a test of this low. It doesn't look like it, but you always got to be ready for your downside risk. Silver is just about at the level where I've said before, and I know a lot of people have been saying this, where it's just going to take off. It's having that same move up that gold has had. I inserted a trend line just like I did with gold. This is the level I said a long time ago, back when we were around here and in other videos at various points. We got to get above 2761, and we got to test it and confirm it, and then resume off, and then it's off to the races. That's the last, to me, that's the last major level of resistance that silver has to get through before it really takes off and is off to the races. It's helpful to remember too the gold-silver ratio. As long as XAU, XAG is moving to the downside, that's good, because that means that it's the confirmation of the precious metals bull market. In that kind of bull market, silver will always outperform gold. So you see we had this upward consolidation. We had this upward consolidation here, and I drew in some of these trend lines. I had a couple different kinds of trend lines. I connected these 2 touches, and then we came below, have retested, and then resumed down. And so as long as this continues downward, silver will continue to outperform, and gold and silver will continue to be on the moving to the upside. So That's kind of what's going on in gold and silver. And then finally, Bitcoin. Done a lot of work in Bitcoin. I won't spend a lot of time here. A lot of people are not patient, and they want Bitcoin to go to the moon today or yesterday. There's a lot of speculation, a lot of euphoria regarding like Dogecoin, Ethereum Classic, and the run that Ethereum has had lately. Bitcoin is not late. It's not early. It does precisely what it needs to do at exactly the right time. Okay, but we've had a couple of really good days, had a couple sell downs, people freaked out. So funny to think that after being down here and still holding their Bitcoin, they saw Bitcoin do this and freaked out. But Bitcoin is on its way up. Bitcoin is pumping just like gold and silver. I didn't draw a straight line. Maybe I'll just draw a straight line here so that we can have it here. We've got this ascending trend line, maybe a triangle pattern, whatever you want to call that. We're on the way to the upside. I've said in previous videos that the amount of time that it takes for Bitcoin to come to the downside, it usually takes a little bit longer for it to retake its all-time high. So we're now somewhere around, I want to say 12 days or so since this top, maybe 11 days. So I'm looking for at least a few more days before we get back up to this level. But Bitcoin also now back above its 50-day moving average. And so it looks good here. Remember your goal, if you're into Bitcoin, your goal is to hold until September. And so there's a long way to go before September. No need to panic. Everything's fine. Nothing structurally wrong. You just need to have patience to see this through and to have diamond hands and to not get shaken out with the rest of the weak hands. So that wraps it up for this week's update. Feel free to like, subscribe, share, leave a comment. Let me know what I can do to make these better, what I should look at. Thanks for watching, and I'll see you guys next time.